Take Brexit, add optimism about a trade deal, and you've got a good day on Asian stock markets. As the day began, Boris Johnson was being re-elected with a clear majority, and there was talk of the US holding off on imposing new tariffs on China. So Hong Kong's Seng led the gains, jumping nearly 2.6%, rounding off its best week in almost 6 months. Mainland shares also seeing green, with the Shanghai composite closing at its highest level since early November. Tokyo stocks, though, hit a 14-month high on the Nikkei, driven by trade heavyweights, new flare technology, and Toyo Electron. Good news also in South Korea, with the Kospi topping a 7-month high, ending up 1.5%. Now a look at currencies. Traditional safe havens such as the yen took a hit. Most other Asian currencies strengthened, with the Chinese yuan at a 4-month high and South Korea's won seeing its biggest one-day gain in more than a year. Now, the pound sterling has had its biggest jump in nearly 3 years against the euro off the back of that Tory victory. Against the dollar, well, it reached an 18-month high. So let's take a closer look at those numbers with Philip Wee. He's the senior FX strategist at DBS Bank. Philip, thanks for joining us today. Okay. So a Tory victory, do you see that as a win for markets and UK businesses?
I think it's very important to reduce the uncertainty. Brexit is important for Europe, which is pretty weak right now. So it's seen as one of the risks that could tip Europe into recession. So I think for Asia, that's very important. Europe is a key trading partner. I think the other two important factors is that the Fed, the ECB, and the other central banks, they've kept this asymmetric monetary policy stance. In other words, we have ease. So we're going to keep it that way right into next year, and and we'll be watching the data. So that provides the comfort, the platform that has helped to stabilize the sentiment this year. So I think on the trade deal, there's also the other uncertainty, like Brexit. We have this problem of investors becoming, resigned to the fact that it's going to be prolonged. So we need to break this, mindset. And I guess the trade deal and Brexit, what we like is that it sort of gives you this hope that political gridlocks, so whether between countries or between parties, can be loosened. But at this juncture, we don't think it's broken yet. So, but nonetheless, we'll take whatever we can for Christmas.
Right. You mentioned that stable sentiment earlier. That also extends to the pound, because just now we saw the pound really rose quite dramatically.
Yes, I think for the election, it's pretty much an event risk, binary. I think in the market, we sort of have this view that if he gets the majority, we'll go into the 130, 135 range, which is where we are right now. And if, if we get a hung parliament, we probably go down to 125. Political paralysis is seen at 120, and a no-deal Brexit below that. So that's, I guess, how we frame the different ranges for the pound with regards to all the Brexit risks.
Does Mr. Johnson now see himself as being in a better position, a stronger position perhaps to negotiate free trade deals? That was, of course, one of the sticking points when it came to him winning the election.
Okay, I think the key thing about getting Brexit done, there's two parts to it. One is that we're going to get the bill ratified, on Brexit Day itself, 31st January next year. But the second, the full Brexit, is on 31st December. So we have this very short 11-month window to negotiate the future relationship. I think the key challenge is that can you really negotiate the trade terms when EU wants to resolve all other issues first? So my guess is that we need to pay close attention. But at this juncture, I would say that the no-deal Brexit risk has definitely been reduced. And there's also this chance that with the stronger majority, I think all of us have Brexit fatigue. And, I think none of us really want a no-deal Brexit. So maybe at some point, for example, like what the Irish foreign minister was suggesting, maybe we should think about extending the transition period to 5 years even, which sort of covers the new term that Mr. Johnson has.
So let's come back to those US-China trade talks, reports saying that there's some sort of deals in place, no confirmation as yet. But if no confirmation comes in, then that new round of tariffs does kick in on Sunday. How important is it that we sort of get an agreement before that kicks in? Is it a do or die, as some people would say?
Well, okay, it depends on how you look at it. For example, last year, when the tariff war started, we went into new trading ranges, much weaker ranges for Asian currencies. So the interesting thing is that, we had a re-escalation of the trade tensions this year. Take dollar Seng, for example, we're still in the same, range throughout this year, the same range that we've seen for the second half of last year. So, but what has changed is that this time around, the U.S. was also hurt by this trade war. The Fed also had to join in terms of monetary easing, and that was really, really important in helping to stabilize the sentiment. So I would say that the trade, having a trade deal, I would like to see a rollback in tariff. That sort of signals de-escalation. So that would help, to provide a sort of window, for us, for us to tell the business sentiment that's been hurt by this worry about prolonged uncertainty, that it's okay to start investing again.
Just a very quick question. Once confirmation comes in on Monday, do you expect those gains to be priced into the markets?
Well, like the pound, we have ranges. For example, I think the baseline was that we get a deal but no tariff rollback. So that will keep dollar China between 7 and 720. So if we get some rollback, maybe 680 to 7. And, I personally like, what China suggested in terms of phase deals and phase rollbacks. So that will create expectations, of really a de-escalation. And, so that under that circumstance, I would look for, a possibility of even lower dollar China. But until then, I think we'll still keep close to the 7 handle.
All right, thanks very much for that, Philip. We've been speaking there with Philip Wee. He's a senior FX strategist at DBS Bank.